Welcome everybody. This month's series is going to be on finances and getting into financial planning and some different strategies to help you guys. And I thought I would kick off the month here with Jason, and who's our CFO and general counsel, and quite frankly, way smarter than I am. And just kind of go back and forth and discuss some things that I think would help a lot of you. I think I see patterns. I think one of the nice advantages that I have is I get a bird's eye view of a bunch of different companies and how they're operating. And obviously, if anything that dealing with COVID has taught us is preparing in a little different way. So I think starting out, I want to talk about kind of just different ways I see owners compensating themselves. And maybe some recommendations. Now, obviously, kind of disclaimer: we're not CPAs, so coordinate with your CPA. If you need a recommendation, we've got a really great CPA that we use for tax strategy. He's not who we use for our accounting. We do that in-house, and they don't really even do that. But he's great at tax strategy, and I like the fact that he owns not just his CPA firm. He's got multiple businesses and a ton of real estate. So he's somebody that we bounce ideas off of often. So first of all, looking at your overall structure, one of the things that you've got to look at is how you're incorporated, what type of company you are, and what type of compensation you are taking. One of the things I see a pattern of is either owners taking really large W-2 salaries, which are probably not necessary, and really just cost them more money and the company more money in terms of taxes. What I do is I take a reasonable salary, and then I take a set monthly draw on top of that. And again, I think that's a good strategy. Obviously, if you get into partnerships and you have partners, it does change some things because you want to make sure things are equitable. So because there's also things that the company can't pay for that are legitimate write-offs to help reduce taxes, as opposed to me paying for those things individually. So that's some of the things there. But overall, I think one of the things to even back up even further than that is taking the pressure off of your company. So one of the things that I have seen, especially through COVID and even prior to COVID, is a pattern where lifestyle requires so much income of ownership, leadership, what have you, that they've got to draw a lot of money out of the business. And that just puts a lot of pressure on the business. So a lot of we're big Dave Ramsey fans. But I think reducing your personal debt and monthly requirements, as well as reducing your overall expenses to a point. I mean, obviously we live a good lifestyle, and you can live a good lifestyle, but reducing it to the point where it's not putting pressure on the business to spit off so much income. And what that does is, one, it allows you to reinvest in growth. Two, it allows you to have more cash reserves, which I know Jason will talk about here in a little bit and doing some planning. But also three, it allows you to reinvest in your team and do things like profit sharing and things like that, which, obviously employee retention, attracting and recruiting better people, overall culture and environment, getting people to think outside the box and start to think like owners, to drive profit, to drive revenue. So there's a lot of domino effects of doing those things. And so the companies that I've seen be the most successful are really nimble. And to me, that starts with the ownership being nimble financially and being stable financially. Now, I know some people, have been through really tough times and maybe aren't able to be in that place just yet. But I would highly recommend, as business comes back for you, or as you grow sales, whether it's now or over the next couple of years, your lifestyle doesn't increase with it. Have that delayed gratification. In fact, even one of our core values is frugality. And part of the definition that we use is just because we can doesn't mean we should. right? So just because your quote unquote business is making the money, don't immediately go buy the new vehicle, the new house, increase the lifestyle. Not that those things are bad or wrong, but just wait. Even if you wait, a year or two, delay it a little bit, drag your feet a little bit. It'll keep the pressure off the business. And I think sometimes as entrepreneurs, we thrive under that pressure. And I know in the past I have. And so it's kind of this, you create this need to make money, and therefore you kind of perform and hit this goal, and it can become very addictive. But it's way less stressful to realize that you don't need to make a lot of money, and it allows you to think differently and make different business decisions. So I think, first of all, starting there and thinking about that, I'm happy to have one-on-one conversations with you guys about that, and some of the lessons that I've learned, some of the tough lessons I've learned, and very expensive lessons I've learned with that. But that's one of the things that I see when I can identify clients who, even when their business got rocked during COVID, they were able to exhale and think clearly because they didn't have the need to pull a lot of money out of their business, because their lifestyle to maintain it didn't cost a lot. So to me, that's one thing to think about. Then obviously moving forward, how you compensate yourself is really key. And kind of carrying forward with if you increase revenue, delaying that gratification. Obviously, I think every company wishes, most companies wish that they had more cash reserves. That was one thing I was very glad that we went into this COVID thing with a lot of cash reserves, and by a lot of people's standards, it probably was too much, quote unquote, cash reserves. But it even made me more, man, I want even more, right? So putting that money aside is one thing, to have the cash reserves. Following up with, and I know we're going to touch on this here, Jason, is planning for the future, which is, how do you really take financial pressure off your company, right? If you view the company as just a way to extract money out of it, then man, you're just using the business. Obviously, yes, we're all in business to make a living and to provide for our families and for the families of the people that work for us. But we're also trying to create value in the marketplace, make an impact, and do things. So I think, I just noticed a trend, right? And I can sadly, I can probably put clients in buckets based on how they view their business. And most people, I think, view it as a very active service and serving their employees, and have the right mentality. But how do you take that pressure off? So one, reduce your personal debt. Two, increase cash reserves in the business as you can. So delay gratification. Wait on that new office one more year, wait on that new truck one more year, wait on the new house one more year, wait on, expanding, or even buying new computers in the office and software. Just drag your feet 6 months, pile up the cash. So that's one strategy. The other thing, and this is something that we're actively pursuing right now, is when you have those increases, instead of increasing your lifestyle based on those things, take that money and invest it in something outside of your business, right? So for us, I've got a passion for real estate. We've got some people on our team that have experience in that area. So we are targeting real estate. And so the idea is to take the profits of the business and buy real estate. And, being fully transparent, I will be able to exhale. We've been very blessed, and it's been good. And, we'll this next March will be, or next May will be 4 years in business. But I think I will be able to exhale fully for the first time when there is enough income coming in outside the business that even if I took zero from the business, it doesn't affect my life or my kids' life or future. And that'll be the time when I can fully exhale and realize that I don't, quote unquote, need the business to feed me, and I can completely serve it selflessly and serve my team selflessly. And so I think that becomes the next phase for people, right? Now, I know everybody's in a different cycle in their business, and some of you are still fighting to survive what has happened through this COVID and the oil field downturn and amongst other things. But I think we've got to learn the lesson and begin to have a plan going forward. So that's kind of just a brief overview. Jason, I don't know if there's anything you want to add to that or expand on there, because I know you've got a lot more knowledge and are looking at the numbers daily.
But the two things that stick out that I heard you say, Matt, was one thing that we benefit from is as a company that serves diverse, wide range of clients, is that we have access to a great group of businesses that we can glean from, learn from, understand what the issues are, understand what the business community is going through as a whole. The other thing that I think is interesting from your perspective is you are involved in a lot of associations where you can learn what's going on. And I think that's something that our clients, businesses could benefit from in a lot of respects. Can you talk a little bit about just generally the associations and what that looks like?
Yeah, absolutely. I mean, it's so easy as a business leader to feel alone on an island and to feel like your problems are unique and you just kind of get focused on doing what you're doing. But organizations, whether it's YPO, whether it's C12, which I really like, it's a Christian business person group. They've got different chapters around San Antonio and even around the country. Is awesome. I've done EO in the past. I've done Tony Robbins Business Mastery. And so I think putting yourself in those type of organizations and groups is key, because there's a level of transparency that comes through in those groups. There's a level of vulnerability. And what's said in amongst your group is typically, kind of classified, if you will. But it is amazing to me the challenges people go through. And then I think being what we do, a lot of our clients, a lot of you guys have come to me and shared these things with me. I've had this conversation, kind of touched on it with 2 clients just this week already. And one of them is asking, what do I do here? Do I make this decision financially? And the other one called to ask how many months cash reserve should I have? Like what is the right amount for me to have in cash reserves? When should I feel secure? And I think there's a lot of insecurity for people coming through COVID. And so, to me, getting in those organizations and having those conversations with people is only going to make you a better business leader. It's only going to make you a better operator.
Yeah. And I think that's, internally we're going through this what we would call learning organization. And that's I think the key to success in any realm. And that is trying to figure out what you don't know and learn about what you don't know. And that's, those organizations provide that. We can help guide you as a service provider. The second thing I would say learning is what Matt touched on, is cash flow and preparing for the future. And that aspect is, kind of diving into analytics, business analytics, looking at measurements of your company and understanding what you should be measuring in your company, what numbers you should be measuring. And Matt mentioned often with business owners, there's a fear of the unknown. And what analytics can do for you is shed light on the unknown. It can show you where your business is, because you just can't bury the truth and hope it doesn't catch up with you. I think the importance of understanding your business, your cash flow, your projections, your budget is very, very important. And what the key to that is looking at the past. So you start off, what did our business look like and in the past, and then you can start using those numbers, make some projections based off of those numbers, and then understand what your business could look like in the future. I think it's that future that scares a lot of people. And if you have a good foundation of analytics, things that you are measuring, things that you need presented to you on a daily, weekly, monthly basis, that you can say, I feel comfortable making this decision. I feel comfortable investing in technology, investing in equipment, investing in new employees. So, I really think when Matt talks about putting a plan together, the plan starts with that understanding: where is our baseline? Where are we at now? And what do those numbers look like? And we're going to go through, and I just back up for a second here and kind of show you how we're going to try to provide our clients with some information, and then employees with similar information. We've got a plan here. October is what we're calling our financial planning webinar series. Starting off this October 7th here, we're kind of briefly touching on some areas we're going to cover in more depth over the next few weeks. But the short of it is, on Wednesdays at 2 o'clock, we're going to be holding these webinars. We've got some people that are going to help us here. You can see Slavic, 49 Financial, Bank of America, Integrity Internally. We're going to work through some things. And ABIP is a CPA and advising company. We're going to cover next week. We're going to cover personal banking and investment decisions. So Bank of America is going to give some of our employees some advice on starting checking accounts, what the benefits of a checking account. 49 Financial will talk about some investment ideas that they work through with their clients. And then the following week, we're going to get into internal financial controls for small businesses. So that's going to be led by Mary Carter, our controller at Integrity. And then we're going to ask Bank of America to talk about commercial banking. So October 21st is going to be more targeted toward our clients and business owners to help walk them through some of those financial controls, commercial banking issues they might have. And then October 28th, the last of the series, we're going to do cash flows with ABIT. They're going to talk about the PPP loans, non-interest carrybacks, R&D tax credits. So they've got some interesting things they're going to cover as well. If any of our clients out there have any issue, anything they'd like us to cover, please shoot some information and some ideas, and we'd be happy to see if we can find someone to help address any of those issues. Unless Matt's got anything else, I will turn it over to our second analyst, Bob Walsh with 401k, Slavic 401k, who happens to be our 401k provider. Matt, you have anything else right now?
I think just kind of to wrap up what you're saying, and this is with the discussions that I've had with the two clients this week even, is when you start talking about your business analytics, understanding the levers that you can pull and what are the things that drive your cost of goods, what is it, your based overhead. You typically have a margin on your business up to a certain point, then everything's kind of covered, and after that your margin should increase, and understanding those things is super key. So if you want help with those or want to walk through those, and sometimes it's just fleshing them out with somebody, I'm happy to schedule a time with you guys to do that. I enjoy those things and being able to identify, hey, this part of your business is more profitable, even though maybe you don't do as much revenue. How do we increase that revenue because it's a higher margin portion of your business, and begin looking at diversifying those things and analyzing your business in terms of cash flow, right? And cash flow, but also cash reserves, because the answer to me is different. Depending upon your industry, depending upon your personal situation, how much cash reserves the business needs. What's the likelihood of your business revenue getting cut to zero? Obviously with COVID, we had clients that absolutely happened. The revenue went to zero. And then it becomes, how long can you maintain and what do you maintain? Right. And walking through those models. And as Jason said, sometimes shining light on things, some of those uncertain things, some of those scary things, and having a plan kind of removes the fear that's there, and allows you just to say, okay, you know what, we know what our battle plan would be if something like X happens. And so happy to walk through that with you guys, and make sure you're on the future webinars as we're doing cash flow analysis. Jason's very, very good at understanding cash flow. Our business is a huge cash flow business because obviously, 97% of our revenue is pass-through revenue. It's in and out the door, within a couple of days. So we don't keep, we have an extremely quote unquote low margin business. And so managing that cash flow and staying on top of those things is super key to our business, and getting a good flow. And the other thing I'll add just before I forget, and then we'll turn it over to Bob, is also understanding, as you said, looking back historically, different times of the year. I see clients get caught off guard all the time with a quote unquote slow season for them in sales. It's like every year it sneaks up on them, and they're like, oh, it's our slow season, we're really struggling, and they're scrambling. And what I realized is they didn't really plan for that. They didn't account for that in their overall annual budgeting, annual planning. And time and time again, I see it catch businesses off guard. And then they're kind of in this couple month period where they're really struggling to dig themselves out of a hole. And when you see them do that year after year, there's got to be a different strategy, and that's poor planning. And that could be a combination of the things that I talked about. Maybe that's you're pulling too much money out of the business when during those good months, not leaving enough reserves, or not planning ahead, or not having additional revenue streams, things like that. So again, I'm happy to walk through that with you guys. So make sure you tune in or reach out, and we can schedule a time one-on-one.
Awesome. Actually, we're kicking around and looking forward to offering times at which we can come out and do 2-3 hour sessions with clients from financial, risk management, various topics, and we're going to start figuring out how we can start scheduling that on kind of a rotational basis with clients. So please, if anybody has any interest in that, please reach out, and we'll get you on the schedule. So Bob is our Bob Walsh is with Slavic 401k. He's based out of Houston, Texas. Slavic is our 401k provider. They are a co-fiduciary with us. So he's going to get into what a 401k is, what our plan looks like, and then how that could benefit our clients and our clients.
And Bob too, if you'll touch on some of the different ways of structuring a 401k that can kind of benefit some of the ownership and leadership as well, because I know I get asked that question all the time in meetings. How much can I contribute? How does that work? That kind of stuff.
Absolutely. Yeah, certainly. I'll go over that. So again, my name's Bob. I'm a retirement plan advisor with Slavic 401k. So we partner with Integrity HR Management. We've been in business for about 34 years now. You may have not heard of us before. We specialize in 401k plans, particularly in multi-employer plans. So Integrity HR has a really nice 401k plan here that you can adopt onto and essentially hand over some of the responsibilities that you would typically carry as an owner, being the plan sponsor and fiduciary. So really important to kind of think about, saving for retirement. Social Security really isn't what it used to be. I think a lot of folks are kind of well aware of that. And a lot of individuals, of course, are going to want to, maybe have a 401k plan when they come into your company. So let's look at this 401k plan in particular. So Integrity HR, again, is the plan sponsor. They're going to be the main fiduciary or 316 fiduciary on the plan. Slavic 401k, the company that I work for, we're the co-fiduciary to the plan sponsor, Integrity. So what that means is we sort of have some skin in the game in the sense that we are going to review the investments that are offered to you and your employees. And if we see it necessary to make any changes there in those investments, we'll go ahead and do so. So typically, if you were to have a 401k plan outside of Integrity HR, it would be a single employer plan, and you would be responsible for reviewing those investments. So we take care of that here as the advisors on the plan. And then lastly, the company that most everyone is probably familiar with is going to be Fidelity. So they're the custodian of the funds, and that's where the assets are actually held. All right. So if we go to the next slide here, Jason. So let's look again at this particular 401k plan. So there's two ways for a company to set up a 401k plan, either through a MEP or multi-employer plan, or a single employer plan. So when you adopt onto a multi-employer plan, you're essentially handing over the fiduciary responsibilities to Integrity HR and Slavic 401k as a 321 co-fiduciary. Not only are you handing over some of those fiduciary responsibilities that are going to involve reviewing investments, year-end 5,500 tax filings, but we also come in with full integration between Integrity HR and Slavic 401k. So if we look at it from the administrative standpoint, once you adopt onto their 401k plan, everything is connected via Integrity and Slavic 401k. So you don't have to have someone at your company serving as the middleman between Integrity and Slavic 401k when individuals maybe change their contribution rates, change investments, etc. That would all be handled via the payroll company and the 401k administrator. So if you are to go out to a single employer plan, a lot more fiduciary responsibilities that you would take on, administrative roles that you would take on. You'd need to get ERISA bond coverage. You'd have to do the year-end 5,500 tax filing, review the investments each year. And that's really the nice piece here is you can have access to the 401k plan, hand off those responsibilities, and really come in at very low cost. So for you as an employer to offer a 401k plan to your employees, there's going to be no cost there. There are fees to the employees, but because this is a multi-employer plan, and there's a number of other companies who participate in this one central plan, the costs are very competitive when compared to maybe a single employer plan that you would get outside the payroll company. So if we go to the next slide here, we're going to look at the benefits of certain plan designs and maybe why you'd want to choose some designs over others, and what the limits are of how much you can get away each year that you don't have to pay taxes on. So it's pretty flexible in the sense that you can add the 401k plan the 1st or the 15th of each month. You can set certain eligibility requirements. So maybe you want a new hire to be working with you for 6 months or even a year before they're eligible to start receiving that company match and participating in the plan. A match is not required, but of course that's going to increase participation. And it's going to help retain some of those key employees, right? Another retention tool that you can have with that employer match is a vesting schedule. So if we see that we can have vesting up to 6 years, let's say you have a 6-year graded vesting schedule on that match. If someone is not employed for at least 6 years and they are to leave the company, they can only take a percentage of that match with them, and a percentage would go back to the company. All right. You can also have a safe harbor match. So what that means is your plan is automatically in compliance. You wouldn't be subject to compliance testing, which essentially can limit how much some individuals can put into the 401k plan. And then at the end of each year, if you as a company wanted to lower the amount of money that you'd be paying taxes on, you can fund a profit share into the 401k plan. Essentially, you can do this in two different methods, either a pro rata method where everyone's getting the same dollar amount, or under a new comparability method. And what that's going to allow you to do is max out maybe the owners to get to that total $57,000 limit that we see at the bottom of the slide here. So that's how much you can put away in total between three separate sources. One being your own contributions from your earned income, which is $19,500 or $26,000 for 2020. Usually those numbers increase each year. And then the other two sources are going to be via a match, and the last one through a profit share. So you have that option at the end of each year to fund a profit share into the 401k plan. So we know things are quite competitive out there, and it's really important to maybe provide a 401k plan for your employees. Like I was mentioning, Social Security really isn't what it used to be, and I think a lot of folks kind of understand that that program may not provide the income that you need when you do enter into retirement. So it's really important to kind of stress the 401k and to start deferring into the 401k plan. And at Slavic 401k, I would be your designated rep to get the plan up and running, maybe to have a meeting to go over the benefits of your company plan, to really be there as your support once we get the plan up and running, and to relay that out to your employees. Your employees can always call in to Slavic 401k if they want to speak with an investment advisor. No additional cost for that. It's a really nice 401k plan that is offered through Integrity HR. I hear at times that, if you go to set up a 401k plan outside of the payroll company, the cost can be a little higher, and there's a lot of administrative work that goes into it. So for that reason, a company may just not, offer a 401k plan to the employees. It's a really great benefit that you could add to your benefits package at your company. Thank you both for letting me speak. I'm not sure if you both have anything else that you want to add in here.
Just, Bob, as far as the business owners are concerned, if they are interested in contributing to a 401k, what does that look like?
Sure. If the business owners are looking to contribute into the 401k plan, they can. So if they're looking to contribute, are you discussing from their own income, or they're looking to provide a match?
From their own income.
Okay. So they can contribute up to $19,500 or $26,000. And then if they wanted to provide a match or profit share, they can put away up to $57,000 or $63,000 if they're 50 years or older.
And that's a match or profit sharing to their employees.
Correct. So if they're not providing a match, which they don't have to, they can put away the $19,500 or $26,000. Even if they are turning 50 on December 31st, they could do that catch-up contribution to get away a bit of a higher amount. But if they did a match, they can also match, maybe they're doing 4%, they could match that on a salary up to $285,000. So that is the annual recognized limit, and that usually increases each year. So maybe you have an employee or an owner who puts away the full $19,500, and they do a 4% match on a salary of $200,000. Now they have a little less than $30,000 that they've put into the 401k plan for 2020. After the calendar year is complete and before they file their corporate taxes, they can fund that profit share into the plan. And that's something that they don't have to decide on upfront. They can basically come in at the end of the year, whether they had a profit or not, but don't get confused with that word. They can go ahead and wire Slavic 401k the money up to that $57,000 limit. So that's known as the 415 limit, and that's how much they could get away into the plan, tax deferred in total.
Gotcha. And I'll just point out that new clients, current clients, future clients, Slavic, Bob Walsh will work with you to maximize your ability to avoid taxes, tax penalties with the 401k plan setup. That's the first thing that Bob does when he works with a client that wants to start a 401k plan. Is look at those numbers, look at what the individual plan would look like, and work with the client to customize something that makes sense for them.
Mm-hmm. Yep, and what we do a lot of times is a company may be interested in adding a match, and we'll go ahead and run a projection based on prior employees contributing into our plan and kind of what we see across the board. And we would tell companies, this is what we would project for the year, and this would be your maximum exposure if you were to provide the match. So we certainly have discussions with the owners and key decision makers to really put everything in front of them and let them know, hey, this is kind of a standard match that we see, and these are the potential costs. You don't have to add that match as soon as you start the plan. That's something that you can add on to the plan at a later point in time. So you could start your plan up and maybe go ahead and amend the plan at a later date to add a match. So that's pretty common for a lot of groups, is they'll roll the plan out, see what participation looks like, and then maybe down the road they'll introduce a match of something like 2%. Maybe that's a 50% on the first 4% match. So you can customize that match. So an employee would put away 4%. You're encouraging them to save a bit more to receive that full 2% match. So we deal with a lot of different clients and definitely have experience there, and more than happy to help your groups kind of get up and running and have those discussions with you.
Great. Thanks, Bob. I think we're going to finish it up there. I wanted to point out that again, the 14th, the 21st, 28th, we have scheduled for a webinar 2 o'clock on Wednesdays. Bob will be back to review what Slavic looks like from an employee standpoint. So what does an employee who's in a plan, a 401k plan, what do they need to do to go in and elect their contributions, go through the setup to enroll in the 401k plan. So those clients out there that have employees that are in the plan, want to be in the plan, I would encourage them next week, October 14th, 2 o'clock, to tune in. And we will review that, what that portal looks like, what the login procedures look like to start a 401k plan for employees that are interested. So with that, I will I'll say goodbye to everyone and thank Bob for helping us out here. And we will see you next week, Bob.
All right. Thank you all. Take care.